Because fear and greed drive markets, and Bitcoin, kind of the long term, is the energy into it and the mining compute. Against that, you can, as everyone's liquidated, and then Bitcoin goes way up in price because of the mining's liquidated. Then those miners that are remaining mint money. Right. But as they're as miners are liquidated, that's going to happen right now. Like, we're in that process right now. All of the machinery that they bought also is liquidated, and there's prices you just get to keep on falling.
Bitcoin disrupts dysfunctional financial systems by empowering entrepreneurs to create an abundance through decentralized innovation, altering how we think about money, value, and wealth. Jeff Booth's path from financial ignorance to financial enlightenment demonstrates this shift in finance, and also provides significant insights into the world of Bitcoin. In his latest interview, popular entrepreneur Jeff Booth spoke about Bitcoin's market dynamics, energy efficiency, and strategic positioning, shedding light on the cryptocurrency's transformative power and entrepreneurs' roles in shaping a free market economy. According to Jeff Booth, Bitcoin's market dynamics are driven by fear and greed. Successful miners trade counter-cyclically, selling while others buy. Booth stressed understanding market cycles, quoting Warren Buffett's "buy when there's blood in the streets." Booth discussed Bitcoin mining's energy efficiency, using a Baker example to demonstrate excess capacity usage. Jeff Booth pointed out the tremendous boom in AI computing, which is driven by high energy demands. He emphasized that miners should double down during times of economic difficulty because gains often occur 6 to 18 months after the crash. He further emphasized Core Scientific's novel method, which uses Bitcoin mining for high-performance computation and AI. Watch clips from the interview for further insights into Jeff Booth's discussion. Please do well to like, subscribe, and turn on notifications for more insightful content. Thanks for joining us again. Enjoy the video.
Because fear and greed drive markets, and Bitcoin, kind of the long term, is the energy into it and the mining compute. Against that, you can, as everyone's liquidated, and then Bitcoin goes way up in price because of the mining's liquidated. Then those miners that are remaining mint money. Right. But as they're as miners are liquidated, that's going to happen right now. Like, we're in that process right now. All of the machinery that they bought also is liquidated, and there's prices you just get to keep on falling. And actually, Bitcoin goes through this process of having a hard time kind of accelerating because all the miners are selling everything they can, the kitchen sink, to try to stay in business to the time where other miners fail. They can be profitable again. And the opposite side of that is true too. At the top, everybody's racing in because everybody's making money. That creates the cycle again. So there's these massive whipsaws in the cycle in mining. And so through that free market force of having somebody always buying your excess, you create all the capital costs to create and growth in your business, create abundant bread. Now just insert energy for bread, and that's what a Bitcoin miner does. And there's a constant competition to be able all over the world to chase the lowest cost energy. So you're creating abundant energy by having a buyer that's always on, that'll always take up that. And it's a free market force for abundant energy. Now that free market force, because it's anywhere in the world, at whatever wasted energy, abundant energy is always hitting this planet. We have so much energy. It's the pricing mechanism for energy that's co-opted, right? Because it's centralized. This doesn't care. Go find the best energy wherever that energy is, excess energy, and you could place your Bitcoin miners anywhere, and you're creating abundant energy and money from that. That's what bounds this to energy, and it doesn't care. You might, if you're pricing that energy too high, because you're going to get liquidated. But Bitcoin doesn't care, so that's how it creates abundant energy. But because that process measured in Bitcoin is pricing energy lower and lower and lower, that race for more energy is more and more. It's more. People are pricing their energy in a fiat denominated instrument, and they're getting, and some of them are getting killed, and they're pricing energy too high. So that's going to keep happening from that side, and it will have abundant energy on this planet as a result of Bitcoin. The other side, because that's such a competitive market, then as you create this energy, you need to move that energy to higher uses of energy. Right. So what Core Scientific has done is they've created the Bitcoin mining in exactly the same configuration that high performance compute, AI compute, needs to be able to move to utilize that. And that high performance compute has to be able to run these models, at least train the models, is just an energy hog. And because at least today, the economics are there, everybody's investing in it, and we're going to talk about that too. They'll sign long-term contracts, crazy long-term contracts, fully funded, to be able to secure the energy for their needs. So you move your energy from high-cost centers where it was Bitcoin mining to trade it for people who will pay way more. And then you take that money and you take your Bitcoin miners and you chase lower cost energy. Now you have a barbell strategy in your company. On one side of it, you're selling energy to the highest bidder of energy, and then on the other side of it, you're creating abundant energy. So what will happen to AI compute? AI compute right now, you have a massive bubble.
Jeff Booth discussed his experience, which began with him being uninformed of the basic dynamics of the financial system. He saw that invention had become consolidated, resulting in centralization and manipulation. This fueled his desire to better comprehend the dysfunctional monetary system. Booth had an awakening when he realized that inflation should have been zero due to productivity increases. This prompted him to write his book and research Bitcoin. Bitcoin entrepreneurs differ, according to Booth, since they acknowledge the system's limitations and seek plenty. They develop valuable services motivated by a sense of purpose. Jeff Booth stressed Bitcoin's revolutionary impact, comparing it to a check valve. Once grasped, there's no going back. Teams involved in this movement share a vision for a free market, abundance-creating economy. Let's go back to the interview and watch more clips to gain insights from Jeff Booth.
There was hype cycles, there was everything else too, but what it actually meant, what most people couldn't see, I had to be a part of it. And there was some incredibly brilliant people as part of it, but it got consolidated. It got all of the things that you believed you were doing got consolidated because of broken money, and they just turned into faster centralization. And so we got some of the gains, but most of the gains were sucked from us through mass centralization, and then used against us to create more misinformation, more monopoly power conspiring with government to continue to do the same thing. And so my path through that journey, but you didn't know as you were building technology there that you were part of that, because I didn't know money enough. And that's actually why I wrote my book, because I couldn't square the circle with why prices weren't falling. Because underneath everything, prices should have been falling exponentially as the rate of productivity increased. So every year people were measuring inflation from 0%, but they should have been measuring inflation from like -5%. And that what that would mean in that world is everyone in the world got richer, even if they didn't work, because prices were falling every year for them. And so I couldn't square that peg from that, which chased me down all of this stuff to understand how the existing financial world was constructed on this manipulation. And it takes your breath away. But once you know, you can't unknow something. And so once you know that, you started adding your time to create a different world, a different world that looks very different from an extractive economy that looks like something that is in service of all of us. And so what makes Bitcoin entrepreneurs different is they know. And once they know, and I'm not just the entrepreneurs building profit businesses, but the cypherpunks before I knew, right? that all of this innovation then led to Bitcoin itself. It was like it's 20 years of innovation of different trials, errors, and everything else that then the discovery of Bitcoin. So the people kind of, it's the one person, but it doesn't look like that. That's not the way that we learn. That's not the way. It's all of the initial trials that didn't work, and then an insight that connects it all, that creates something else. And my own learning, same thing. Your own learning, same thing. But once and as you understand Bitcoin, as you're going down the rabbit hole and you put it all together, it's almost like a check valve. You can't go back. Then you go deeper and you can't go back. Then you go deeper and you can't go. But once you're now inside this new system and measuring from this new system, all of the things from the old system make perfect sense, as do all the things in the new system. So what attracts me to what makes those Bitcoin entrepreneurs different, and what makes kind of that, not just the entrepreneurs, but all the teams that are joining those teams, they know full well that their actions matter. And they know that their time matters in creating abundance for everyone. They can do really well. They can do extraordinarily well by creating valuable services for other people. But in service of that, it works in the free market. And so they're all so what you see is just tons of shots on net and ideas that are that. And by the way, the thing I couldn't see before I dedicated my time to this is I couldn't see how many people there were and how many opportunities there were, because I wasn't doing it. Right? I was like very similar to people who were talking about Bitcoin as this thing, but couldn't really see how fast this would move and what this would look like and all the excitement, because I wasn't in it. But now being in it, I actually feel sorry for people that are outside of it.
In related news, Bitcoin's rise above $69,000 has provided relief to investors following a period of slow trading, as it has broken over important technical milestones such as the 200-day and 111-day moving averages. Glassnode's analysis shows that net capital inflows have accelerated, growing by $21.8 billion plus 3.3% in 30 days, resulting in a new all-time high realized cap of more than $646 billion. This shows increased liquidity and considerable capital inflows, which are supporting the price increase. Short-term investor holdings show unrealized profits in all age categories, indicating increased market confidence. Analysts Eucuria OC and CryptoVisart believe this will spark further higher price activity as investors seek additional incentives. Bitcoin futures open interest hit $32.9 billion, thanks to institutional participation through the Chicago Mercantile Exchange, CME. Glassnode's data shows a considerable increase in cash and carry trading methods, in which institutional traders use CME futures for hedging and yield generating. The annualized basis yield of 9.6% nearly triples short-term U.S. Treasury bond yields, indicating increased institutional interest in Bitcoin. This development highlights Bitcoin's increasing popularity as a legitimate investment alternative. Technical threshold breakouts, higher capital inflows, greater liquidity, short-term investor profits, and institutional participation in derivatives markets all contribute to the rally. The combination of these elements indicates a positive shift in market mood, which could pave the way for future growth. The huge increase in institutional participation, particularly via CME futures, shows a maturing market. As Bitcoin's liquidity and attractiveness continue to expand, its potential as a strategic reserve asset and hedge against inflation and geopolitical risks increases. How do you think Jeff Booth's experiences and perspectives on Bitcoin and the financial system can influence your understanding of the cryptocurrency market? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.